If you've been watching State Bank of India's stock lately, you've seen something pretty special. It's been on an absolute rocket ship. But what's really behind this incredible run? Well, let's dive in and break down what's been driving this momentum.
It all really kicked into high gear with this massive single-day jump of over 6%. Now, for a company the size of SBI, a move like that in one day, well, it definitely gets everyone's attention.
But this isn't just a one-day wonder. If you zoom out just a little to the last month, you'll see the stock has shot up a solid 13%.
And let's pull back even further. Over the last 6 months, investors have been rewarded with a fantastic 37% gain. So you can see this has been building for a while now. And here it is, the big one. Over the past year, SBI has delivered a whopping 53.5% return. Now, a rally like this doesn't happen just because of good vibes. It begs the real question.
So what is the actual fuel for this fire? This isn't about rumors or market chatter. No, the real answer is buried in the bank's own numbers.
The whole reason for this party can be pinned on one thing: SBI's absolutely blockbuster financial results for the third quarter. So let's take a look at what made them so good.
First up, the headline number that everyone jumps to: net profit. It soared to over 21,000 crore rupees. That's a massive 24% jump from the same time last year. Just huge.
But you know what might be even more impressive? The operating profit. That grew by nearly 40%. And what that tells you is that the bank's core business is running stronger, and they're getting way better at managing their costs.
The bank's main engine, the money it makes from lending, grew by a very healthy 9%. And even though their margins got squeezed just a tiny bit, the sheer amount of new loans they gave out more than made up for it.
But okay, beyond all the amazing profit numbers, there's one thing that really got the market fired up. The biggest green flag of all was the huge improvement in the bank's asset quality. This is where investor confidence just went through the roof.
The bank's gross non-performing assets, or NPAs, fell quite a bit. That clear downward trend is exactly what investors love to see. But what exactly is an NPA?
Let's make it simple. An NPA is just a fancy banking term for a bad loan, one that's at risk of not being paid back. So when that number goes down, it means the bank's overall risk is dropping, which makes its future profits look a lot more predictable and safe.
And it gets even better. On top of having fewer bad loans, SBI has been really smart. They've been setting aside money to cover any potential losses, basically creating this big, comfy safety cushion.
And just how big is that cushion? Well, their provision coverage ratio, think of it as their rainy day fund for bad loans, is now over 92%. That means if the economy hits a rough patch, SBI has a huge buffer to absorb the hit.
Okay, so the bank's health is looking fantastic. Now let's switch gears and look at what's going to drive growth in the future. And it really comes down to two key engines. First, you've got the traditional banking engine, and it is absolutely firing on all cylinders. Loans are up a strong 15% year on year, and deposits, the fuel for those loans, are up a healthy 9%. This is the bedrock of their business, and it's booming.
But the second engine is where things get really transformative. Get this. A staggering 98.6% of all SBI's transactions are now happening digitally. The move away from physical branches is practically complete. It's incredible.
A huge part of this story is their YONO platform. That's their all-in-one digital banking app, and it now has over 9.6 crore registered users. That is a massive digital customer base.
And YONO isn't just for people who are already customers. In the third quarter, 68%, that's more than 2/3 of all new savings accounts were opened through the app. It's become this powerful machine for bringing new people to the bank.
So what does all this digital dominance actually mean for the business? Well, it's simple. Fewer people in branches means lower costs. Digital processes are just way more efficient. And both of those things lead directly to better profits in the long run. It's a huge competitive advantage. Okay, so we've looked at the profits, the asset quality, and this huge digital transformation. Let's put all the pieces of the puzzle together and see what it really means for an investor.
So why is the market so excited about SBI? It's really the whole package. You've got strong core profits, a much healthier balance sheet with way less risk, and this dominant digital platform making everything more efficient. You put all that together, and of course, market confidence is going to soar.
It's clear that SBI is in a position of incredible strength right now. Its main business is solid, its risks are under control, and its digital strategy is paying off in a huge way. Which leads us to one last really interesting question. As powerful as this rally has been, could we be watching the beginning of SBI's best phase yet?